Welcome. It is nice having you. We have a lot to get to today because there's a lot going on with respect to the stock market, with politics, geopolitical actions, and a lot of ups and downs and volatility right now. That's where I want to start. Volatility. Because what we're seeing is volatile, especially when it comes to silver and gold and a lot of the precious metals. And yes, we have been harping on for the last number of months that these are great places to be invested. And the reason why is because of the fact that they do well in times of turmoil, when they can be a ballast to what's going on, when we have the US dollar starting to go down in value versus up against other currencies, when we have treasuries start to go down, when all of these things start to happen, gold can be a very interesting place to be invested because it can provide that stability. But here's what else is going on. When we take a look at what I know a lot of you have been really talking about and listening to the news media, we have other countries that are selling their US treasuries, so the US bonds. And what that means is they're actually taking money out of the US and they're putting it into gold. They're putting it into silver. Now, that's a lot of political actions that they are taking, but also this is just maneuvering for their own industrials, for their own sake as well. So there's a lot that's going on with this. But here's what is really interesting. A couple days ago, we had what we call a 7 sigma move. Now, this move is extremely rare. And think about it this way. A standard deviation is basically one standard deviation would be a move plus or minus from the median, and then we can go into two standard deviations, 3 standard deviations. So this is a 7 standard deviation, a 7 sigma move, and it's a 1 in 7 billion type move that we have had. So this is extremely rare, and that's what makes this so interesting, because this extremely rare move on the downside came after an extremely rare move on the upside. So you hear the term sometimes from people that, especially millennials, they coined the term years ago that we're crashing to the upside. So this means that we, instead of the stock price going down, that is going up faster. And that happens when there's a lot of buying. So we are seeing countries that are buying silver and gold hand over fist. We're seeing individuals that are buying silver and gold hand over fist. And that's why we have it as part of your portfolio, is because of the fact that it is a good place to be invested in times like today. But then we have this massive downside move. And the reason why we had this massive downside move that is extremely rare is because it went up in such a fashion. So don't overthink this, because there's a lot that's going on there. It went up faster than anyone expected, so it can come down faster than anyone expected. So then we have to ask, is the move over? Should we be moving out of precious metals, gold and silver, platinum, palladium, copper, nickel, steel? Well, steel is not a precious metal, but it is an industrial metal that we need to be considering as well. And the answer is, we don't know. But what we do know is that what we look at is the volatility. And when the volatility starts to come down, that's one of the telltale signs that we're ready to go up in value versus down. But not the only one. You see, we look at the trend as well. Is the trend going up or down? Are there different elements that we need to be considering? And right now, all of that is saying, yes, there's heightened volatility, but right now it's saying the move's not over. So we have reduced our positions. We don't hold as much gold, silver, platinum, palladium as what we used to, but that's where we can be looking to reinvest back into them for the growth to come. And that's going to be a great thing, because we are in an environment that really can warrant having that. And that works really well in our lead one phase. But that's where the sell-off really did occur, and it came on the back of the Kevin Warsh announcement. Our president nominated Kevin Warsh for the Federal Reserve Chairman to succeed Jay Powell. And this is something that I think the timing was really just the correct timing, that everyone decided to sell. And by everyone, I do mean the institutional accounts and some of the countries as well. And that's basically one of the main reasons why it went down, because it went up so fast and they just needed that little piece of information to come out from the news. So don't overthink this, because there's a lot going on that is really just these institutional accounts. They sell first, ask questions later. They're doing exactly what they're doing. And so we can be focused on growing the accounts and risk managing. So how do we do that? How do we risk manage when it comes to this? Well, that comes back to the US dollar and where that is going. You see, when it is going up in value, we take a look at what we call the correlation and how it is correlating to gold, silver, to stocks. And if the dollar is going up and we have a positive correlation, then stock market could go up or gold could go up. Well, the reverse is true. When we have a negative correlation, let's say the dollar is going up in value, a negative correlation would mean that the stock market is going down. So it has a counter move to what the dollar is doing. And the dollar has a big weight on what happens in the stock market. And right now, we are having a dollar that is going down in value compared to other currencies. Now that helps our economy to export exactly what the president wants. And that's what he was coming into office to do. So we are having a counter trend move in the dollar, meaning that instead of going down, it's starting to go back up. And as long as it is staying below our trend lines, the volatility stays low, well then, that's just what it is. Just a correction. It can come back up a little bit and then it's going to go right back down. And that's what we're seeing, because the negative correlation that is on gold, emerging markets, and stock markets and broadly are there. And so if the stock market starts to go up in this environment, it's because the dollar is actually going down. So what else do we look at? US Treasuries. That's another element here. And we look at the yields. So we look at the yields of the 20-year, of the 10-year bonds. They're not doing much, but the 2-year is really what signifies what the Federal Reserve is going to do more. You see, what happens then is that this is what we call the Fed front runner. And this can really be the fact that if we're going to be cutting interest rates or not cutting interest rates, it's going to sniff that out. And we're not doing much of anything with our 2-year yield right now, which means most likely no interest rate cut for March. Wow, that's a lot right there. So what does all of this mean? Because I'm giving you a lot of information, but what does this mean to what we're doing to help you with your portfolios, to help you with navigating the worry that's out there? Even though we're in lead one, which is our Goldilocks scenario where we have growth of our economy and we have low or even deflation that's starting to happen. So low inflation and deflation that's starting to crop up. Why is this so important? Well, what we're taking a look at, we have midterms coming up. Oh, and by the way, like I said, Kevin Warsh was nominated. Let's say he actually is approved by Congress, which I think he will be. He is going to come in and instead of what the markets are fearing, that we would be having a Federal Reserve chairman that's going to raise interest rates, I think he's going to lower them more and he's going to lower them faster. Now, our Federal Reserve Chairman Jay Powell currently talks about all of this data and being very data dependent. But ultimately, what it really seems over the course of the last number of years is that he's going more on his gut than data. And Kevin Warsh is very data driven. And when we see that we are starting to take hold with disinflation or even outright deflation with housing, with rent, with energy, those are huge issues that are allowing him to cut interest rates. And if he does that, starts stoking the economy, well, that leads right into midterms. So you can see how these things are starting to add up. Then we have fiscal spending that's starting to pick up as well. And this is from the One Big Beautiful Bill from last year. So we're really starting to see the effects of it this year. And that's something that is going to continue. Another element then is what has been talked about, but not nearly as much. The federal government being seen as a venture capitalist. And you can see this really easily with Intel. You see the government stepped in to purchase a portion of Intel in the stock so that they could help to build out AI technology. You're starting to see this more and more. And if the country steps in, our government steps in to purchase more and more companies, now you see that there's a way that we have kind of a base underneath the stock market. Then you hear about deregulation that is happening, and all of this could help us to really grind higher with the stock market. So yes, I am optimistic. Yes, I think that the first half of the year is going to be pretty good. And if everything goes according to what I've been talking about, the second half of the year could be pretty good as well. But we are rotating out of technology. We're going more into industrials, into energy, into small caps, small companies, mid-sized companies. And so things do change in this environment, which is why we can be cautiously optimistic. But if everything goes according to what I've been talking about here, it means we could probably have a pretty good year. Next year, we'll take a look at that when it comes. But for now, this could be a great time and a great place to be invested into the correct places. And that's what we're looking for. As you have questions, obviously, please feel free to reach out because we'd be happy to talk more and help direct anything with respect to your portfolio and making sure that you are set up for the future. Take care.